Mark, good morning to you. So this is a big event, of course, for the tech world. It's also a huge macro event. I'm talking about the Nvidia numbers. Still many hours away, but no doubt investors thinking about how they position for such a big event. How are you thinking about the Nvidia numbers to come?
I think it's really important to look at the context of Nvidia earnings 12 months ago. So we came into these exact same 2Q earnings in August at the end of last year. The market had done well. Nvidia earnings beat. They were just brilliant earnings. And yet the stock sold off, I think it was more than 20% over the coming few weeks, dragging the index lower. Now that's the bearish way of looking at it. Earnings beat, they're brilliant, and still the stock market tanked. The positive way is obviously the stock market then, after slumping into September, then rallied again to fresh records, and now Nvidia stock is way higher again than it was going to those earnings. I think that the kind of important takeaway from all that is that Nvidia is massive for the coming weeks and can really control the short-term narrative. It is unlikely to be the story in isolation which is going to end or turn this market around on a longer-term scale. So I expect today that Nvidia earnings will be very strong. I think Tom's outlined the details very well. I expect it to beat, and I do think we'll probably get disappointing price action afterwards because the whole world's expecting that. They're positioned for that. Kriti observed the fact that the market's a short VIX. We know the market is generally very long, the stock market at the moment, but I don't think that's going to be the thing that derails this market. I think if you want to be very bearish, and I'm not very bearish, the market's traded better than I expected this month. I expected we'd have more weakness, but I think the weak point at some point will come because bonds sell off too much. Long end bond yields go too high, and that's where the real damage comes. But so far, they're only selling off slowly.
What is too much? Is it 5% in the States on the 30-year? Is it 6% in the UK? Kind of what levels are we talking about? How much further would we have to go?
I don't know, Guy. I'm struggling. I think that in some sense, bond yields continue to go higher as expected. I did think they would go higher at a faster pace. I haven't got the quite timing of this right yet, and I haven't worked out. I feel like there's some kind of binary tipping point, which is what you're asking. I don't know what that binary tipping point is. I don't know whether it's one data point. Is it a level? At the moment, we continue to ratchet up pressure, both in the inflation side and just from these positions getting more underwater. When will it spiral? I'm not sure, but of course, this Friday we have inflation prints from all over the world, so we've certainly got a lot of catalysts on the horizon that might be the cause.
In terms of the catalyst, what matters more at the end of Friday? The potential success story of Nvidia or the PCE data that we're about to get?
Yeah, it's a great question. I think important PC data to emphasize, we get inflation all around the world on Friday, and because this is a global bond problem, not just treasuries, we start with Japan inflation that's meant to come down quite a bit. We then get a load of European inflation prints, so it's the whole inflation story. In fact, core PCE is one that we can estimate very accurately, so it's less likely to surprise. I, though, actually think it might be tech that'll dominate the short-term stock sentiment for the next coming weeks.
All right, Bloomberg Markets Live executive editor Mark Cudmore joining the program this morning. You get more analysis from him and the team. MLIV GO is the function on your terminals.